Tell me what you see from your consumer base right now. Is it about people buying new homes and filling them up? Is it about just being comfy when they're stuck inside, or what?
Yeah, look, I think it's a number of things. We're obviously pleasantly surprised with how the companies fared through the pandemic. We were forced early on to shut down all of our 90 showrooms across the country where we allow people to touch and feel and sit on our really unique couches, right? We make really kind of strange stuff, patented stuff, couch you could have the rest of your life. But as we've seen, people are staying home. They're not spending the money on vacations. They're improving the place they're stuck in. And for a little while there, we were one of the only companies that could even ship a couch, because everything from Lovesac ships FedEx, and touchless, and our warehouses were cranking. And so we've fared really well and continue to.
When you look at just the sectionals, as you call them, your style in a sectional design, these are not cheap couches. We're talking, I see $2,000, $3,000, $5,000, $8,000 for the giant ones. Have you made any price changes to your products throughout this period?
Yeah, we took some time during the first of the pandemic to react very quickly and put out what we call the Heroes discount. So for all of the frontline workers, doctors, nurses, even teachers, people that were exposed on the front line to helping through the pandemic, we gave a strong discount to up to 40% off. And that really drove a ton of business. We've since curtailed that. The business continues to accelerate even over last year as a whole, and so even with all of our showrooms closed at some point, we were comping positive, north of 30%, believe it or not, with all that closed and all the business moving online. And so we feel that, we've built a resilient business that whether it's online, whether the showrooms are open to allow people to touch, feel, and sit, we have an advantage, not just with the product, but with the business model.
All year, your comps on a year-over-year basis have been very big, very positive, 45% in 2Q, and coming up here, that was about a year ago, and you've gone up to 25%, 44%, last quarter at 32%. I see the estimate is for that to decline a bit, but still be positive, just under 10%. So are you seeing a one-time boost because of this, or are you seeing more people learn about your brand and long-term growth following?
We're seeing long-term growth. We with the pandemic in general, we prepared for the worst but hoped for the best. Thankfully, things have gone really well for Lovesac through it, and I think that we feel now we've built a very dynamic playbook, right? So whatever's thrown at us, if it's close all your showrooms, if it's go back to digital only. In our case, we have a number of showrooms right now operating virtually, right, in areas where COVID has caused them to take a step back. And that means they're using the showroom as a set, and they're doing Facebook Live demos. And we've done more than 1 million Facebook Live demo sessions over the last few months. And that's been even more than we could achieve through, physical showrooms. And so these new tactics that we were sort of forced to ramp up very quickly, things that we were already testing, but now gone whole hog into across the chain, will stick with us, and I think carry the business through whatever may come. That's how we view it. Like, we didn't expect to fare so well in these trying times, but so far so good, and we believe that it is sustainable.
What's the time frame on profitability? Can you give our viewers some insight as to when you expect to turn that corner? Because even with almost $60 million in sales last quarter, still an EBITDA loss of around $6 million.
Yeah, so Lovesac is a heavy fourth quarter business for 3 reasons. One, Sacs, our original namesake, are huge during Christmas time. 2, we do have showrooms in shopping malls across the nation. As traffic spikes, so do our sales. And 3, home deck is heavy in January, and we're on a retail calendar, and so our fourth quarter includes January. So for that reason, we typically swing, very positive in adjusted EBITDA in the fourth quarter. And we obviously would hope to offset any meager quarterly losses along the way and get to a profitable business model. You know, we've been a high growth model now for a number of years, and we expect to turn the corner and focus on generating positive adjusted EBITDA. You know, so far we've burned very little cash overall as a company that's growing at the 30-40% range, right? And we intend to continue to, in fact, burn no cash for the balance of the year and focus on raising adjusted EBITDA over the next few years in a steady fashion.
Shawn, one other, just to connect a few points here, as you mentioned, the Facebook demonstrations on the live streams going well. You also mentioned fourth quarter typically with the mall traffic gives you a boost. Any idea how that's going to net out if the mall traffic is absent for the fourth quarter this year?
Yeah, it's a great question. You know, this is where, again, we feel we've been blessed with a very dynamic business model and a really passionate and capable team. So we have a number of tactics up our sleeves that allowed us to fare well from that March and through May time period, which was the most uncertain. And I think that we'll give some credit, of course, to people's cocooning behavior and spending on the home, no doubt. But at the same time, there are plenty of our competitors who just couldn't ship, they couldn't deliver. There's no way to deliver a couch without coming in the home, you know, or delivery truck and two guys. And in some cases, the warehouses themselves had to be closed. In case of Lovesac, because everything's deployed via FedEx, we have these advantages that no other couch maker has. And so, we feel confident that even without showrooms, it levels the playing field, you know, for all furniture purveyors. And in our case, we have these digital advantages, both with the physical delivery of the product, but also just our, digitally native roots. E-com for us is not a new trick. It's the backbone of our business. And we saw all of our sales, as you saw, transition, even with all of our showrooms closed, to positive 30% growth overall for the company. And by the way, that included closing down our Costco shop-in-shop operation.
Wow.
Pop-up shop operation, still growing. Web only beat all of those channels combined.